Okay, Dan Sim here with John Neis from Venture Investors. Thanks, John, for taking time to chat.
Hey, no problem, Dan. Good to be here.
So John, I just want to ask a few questions related to venture capital, especially in the healthcare health tech space. It's always been my impression, at least years back, VI was kind of the main firm that could handle these capital intensive investments. Can you just give a little bit of the history of VI and the context
Yeah,
in Wisconsin? So,
we're actually closing in on our 40th anniversary, which is a little
wow.
hard for me to believe. It's founded by Roger Ganser back in 1982. Actually made our very first investments in December of '84. I
Okay.
had a very tiny fund, but our first two investments were a company called Office Solutions and Promega.
Oh,
So,
wow.
it made a great one early on there. I joined Roger in May of '85, and our first fund was an evergreen fund. We had a very small amount of money, and truthfully, at that point in time, it was we had this vision that there was all these ideas coming off campus or could come off campus. There were all this innovation on campus, and that we could somehow play a role in commercializing it. But candidly, Wharf wasn't ready for it at the time. They wanted to license to companies that had the financial wherewithal to take things to its full potential.
Mm.
Not knowing that, hey, when you get it in a big company and it gets on a lab bench back in the corner and it can easily get lost. If you have a little company whose lifeblood is dependent on the success of that technology, it actually bodes well in the long haul. And keeping the scientific inventors involved also does well. So in 1992, we backed the first company in which Wharf took equity in lieu of an upfront licensing fee, and that was Third Wave Technologies, a company that we eventually took public and was later acquired by Hologic. And the CEO at the end of that was Kevin Conroy, who then went on to do Exact Sciences. So that company had a real ripple effect. Since then, we've done 26 university spinouts at UW-Madison. We opened up an office in Ann Arbor in 2007 and an office in Milwaukee in 2018. And about half of our deals are, university spinouts. We've backed them from 10 different universities now, more from UW than anywhere else because we've been doing it there the longest. And the other half tend to be out of those ecosystems. Universities are just great magnets for people who are innovators and risk takers and highly educated markets and people who see a lot of opportunities.
Yeah. And what areas were you guys focused on? I mean, I know you for healthcare, health tech. Is that a focus or is it broader?
Yeah, no, it is. It's our total focus now. When we started out, we were more generalists.
Okay.
And then, over time, we were doing more healthcare than anything else. And because of that, we were developing relationships with the co-investors in the space, people who could advise us in the space, the serial entrepreneurs in healthcare. We got to know the acquiring companies, the strategic partners, and we just ended up having much more domain knowledge in healthcare. And lo and behold, you look at our numbers and our returns, and it was like, oh, well, we're doing way better in healthcare. Maybe we shouldn't do anything else.
We had some good successes you described there. So, were you part of Exact Sciences also, or?
No, we were not. It was a little unusual because it was a public company at the time.
Oh.
And I mean, we had a very short window of opportunity to consider it, but it wasn't clear whether under our funds we had the ability to invest in a public company. Right. And by the time we could get that question answered, Kevin got it financed. But Kevin remains a good friend to the firm and an advisor to us, and he's a great guy in his head. just tremendous success.
Yeah.
But other successes we've had over the years include in Wisconsin, Nimblegen,
Yeah.
in Verigen, New Wave Medical. We've got some great companies now, Lucent Medical. We also had some, we've done several ophthalmology companies that spun out of University of Michigan. The first one was Intralace, did a femtosecond laser that cut the flap. That was sold for 700 million. Founder started a second company focused on cataract surgery. That was bought for 800 million.
Okay.
And when one of the founders started a third company, of course we were going to invest.
Yeah.
So that was Violace, and that's a high flying company in our portfolio right now.
Okay.
We also have a company over in Michigan, Histosonics, which is a high flyer right now. So we've had some great success.
Yeah. At some point I was going to ask you what you look for in investments, but you hinted at one that I hear over and over again is when you've seen somebody with success before, you invest in that person.
Well, if you look through our portfolio, there's several people that we've backed multiple times in companies. The New Wave team of Dan Vanderweide and Fred Lee and Laura King. We introduced Laura King to the other two. New Wave was a huge success for us. 2 weeks after that was sold to Johnson & Johnson, we were backing them in their next company, Lucent Medical.
Okay.
The Roland Green at Venra, he was part of the Nimblegen team.
Yeah.
When there's people you've worked with before, and you know what they're like to work with, their strengths and weaknesses, you know the skill sets to build around them. It's one of the biggest risk factors, and if you can control that, that's obviously
Yeah.
a huge plus. It's not a guarantee for another success, but boy, it sure improves your odds.
So if there's a really kind of exciting technology, promising market for something, I always talk to entrepreneurs how important the team is and the CEO and so on. Because that's not an uncommon situation. You do have a promising technology, and assume all the elements are there, but there's nobody with experience. How important is it to bring in somebody who's done this before, a new CEO, or do you take a gamble on somebody that's sort of new? Like, what's that balance for you?
Well, look, number one, they have to be open to bringing in the right person at the right time.
Yeah.
Okay. If it's people who are good scientists and that's their strong suit, and they've never been a CEO, they may actually be able to run the company in the very early stages as you're developing the technology.
Mm-hmm.
But as it moves closer to being commercial, you're going to need added talent there. And our greatest successes are with people who have recognized what their strengths are, but also know where their gaps are.
Right.
And have had a real desire to surround themselves with people who they almost see as smarter than themselves in the other territory, the best and brightest people they can find. So at the very early stages, you might not you may not be ready for it, but you can certainly surround yourself with great advisors, good board members, people who can help you along. And then there'll be the situations where investors may help you. Like I said, in the case of New Wave Medical, Fred Lee and Dan Vanderweide came in with a really fabulous idea of as a new way of treating cancer. It was using microwave energy to destroy cancer cells and generate heat. It had all sorts of advantages over RF, which was in the market. And they're looking for $2 million to FDA clearance. And our response was, we have no idea how much it'll cost you to get to FDA clearance, but we do know it will not be $2 million. So let's figure that out. And that's where we introduced them to Laura King, who had been at GE Healthcare. She had been in interventional radiology. She got somebody involved with, great engineering strength, and they did their homework and figured it out. And the number was 6 million, not 2 million.
Right.
And that's what we invested. And then, we thought Laura would make a great CEO. We didn't tell the founders that, and kind of let them work together and see how it worked.
Sure.
And then they came to us and said, "Hey, we got this crazy idea. What would you think
Little
about
did
Laura
they
as CEO?" And it's like, "Oh, yeah, that's a great idea."
Yeah.
So that's the best way. But because in an effort to just like, you don't want to just rush out and pick somebody who's really not the right skill set for your company. Just because somebody's been in business doesn't mean they've been in your business.
Right.
And if they've just been in a big company, that doesn't mean they know what it's like to run a small company. So, but at the bottom line is they need to be open to bringing in the right people at the right time.
Right. Yeah. Yeah. I remember 20 years ago when I was raising money and the investor said to me, "Dan, are you willing to hire people that are smarter than you?" And I thought, why did he ask me that? But now I know why he asked me that. He wanted to know if I was
right
going to accept bringing in other people that are really good.
Well, yeah. Because you know what? There are the people who, it's sort of like they're very smart.
Yeah.
And one way of staying the smartest person in the room and staying in control is hire, grade B or C talent around you.
Right.
And then you always stay the smartest in the room, but you don't really have the skill sets to be successful.
So a lot of, when I work with startups that are doing drugs, devices, diagnostics, they and we run into the problem with a lot of the funds in Wisconsin where they say, and I know immediately what they mean when they say this is, we don't do capital intensive projects, especially in highly regulated areas. And I know they're specifically talking about that.
Yeah.
Like how capital for pharmaceuticals and that sort of thing. What do you think is sort of the typical Series A round that you're seeing for these guys? I know it's a super wide range, but
yeah, it's a pretty wide range. It depends where they are. And look, the most expensive part of developing a drug is the clinical trials.
Yeah.
And it's very possible that the A round might be $6 to $8 million, doing a bunch of preclinical work and proof of concept work that, gets you to an IND filing. But then the dollars grow significantly there. And I think the importance is building, trying to build a syndicate as early as possible. And inevitably you need to go outside the state to look for that. Now, we're a relatively small fund on a national scale.
Mm-hmm.
We won't do it. We're not going to do an Alzheimer's deal.
Yeah.
It's just like, it's like too much money and to get to the very basic answers. I mean, we are selective in what we will do. We like things like oncology because, you're even in phase 1, you're treating sick patients. You may get anecdotal efficacy information in that initial safety trial.
Yeah.
We've done some vaccine deals where, you can get a signal of immune response in a phase 1 safety trial.
Okay.
So, we've generally focused on things that might take, our goal is to be able to take it to, phase 3 ready, because usually that's when you can get an exit. You've retired enough risk that big pharma is willing to take it on.
Right.
Okay. And, 2/3 of the drugs that are introduced every year start in venture-backed companies.
Wow, I didn't know that.
And big pharma has become more of the the banker for the phase 3, and then the resources and network for the commercial launch.
Right.
So, and they're willing to pay a good price for a company with something innovative. So, but I will say one thing that's really changed in the last decade are the number of firms out there doing mega financings.
Hmm.
The $100 million round is not unheard of now.
Not in Wisconsin, it's unheard of.
Well, there's been a couple, but it's but there are the funds. Well, there's Arch out of Chicago, who was,
Right.
As an example, doing deals in that space. Paul Burns, he's a Wisconsinite. He's a UW grad. Led several companies, including Wisconsin companies, to success, and now a VC at Arch, and they do really big stuff. But you got to build those relationships early, and
Right.
you're not, small $25 million funds really have no place in the pharma industry.
So sorry to put you on the spot, but like who in Wisconsin that comes to mind has the capacity to do pharmaceuticals and things like that? So besides VI, or is it mostly just you?
It's pretty much us in the state.
Okay.
And then you gotta venture elsewhere.
Sure.
I mean, there's a handful of players in the Midwest who will do it, and then you got to go talk to folks on the coast. Now,
Yeah.
if it's something we're interested in and we get involved with, we have a network. We can try to build that
Yeah.
syndicate.
Yeah.
We'll want to build that kind of syndicate because it won't be something we'll be able to do alone.
So most Series A, like those, you're syndicating like with how many people typically? So how many other?
A couple,
Yeah, more than one usually. So
yeah, more than one's preferable. Depends
yeah.
how big they are,
Yeah.
But yeah, our preference is to have a couple syndicate partners if we can.
Okay. Well, okay. My last question. So people are looking to pitch to venture capitalists in this space. I'm going to ask you what you look for in a pitch, but I'm sort of asking you what you also look for in a good investment in, say, the pharmaceutical space. And you talked already about, oncology versus Alzheimer's because the endpoints are more achievable for you. But what are you looking for, say, in the pitch?
Well, you know what? I don't think the story of a pitch is overly complicated.
Uh-huh.
I mean, first of all, start out giving us context. What's the problem you're trying to solve?
Right.
And how meaningful it is. And you might start pitching us, and it's like, yeah, we get it, it's a big problem.
Yeah.
But just give us the landscape, and and why it has not been solved to date, and what your unique approach is to resolve this big problem.
Mm-hmm.
And then you kind of lay out the roadmap of what it's going to take to get from here to there.
In terms of time and money. So.
Time and money, and money staged how. I mean, you're looking for how much money now to get what done.
Mm-hmm.
We want to hear about the people and make sure you have the people who have the capacity to execute. And then we want to get a sense of the size of the prize at the end. So I want to come away with a belief that you've got something new and novel that's solving a real problem of considerable value, and you know the resources and time and people that it's going to take to get from here to there.
Yeah. And what's a reasonable amount of time to get from here to there? Because your fund has a time limit on it, right? So
yeah, I mean, it's yeah. Everybody, I will tell you, every VC will tell you kind of like a window of time they want to exit in.
yeah.
And then the reality is it generally takes longer than we all target. Yes, our funds have 10-year lives, but we're initiating new investments in the first 3 years or so. So there's still a 7 to 10-year life there, and the truth is, it's rare for a 10-year fund to actually wrap up its affairs in 10 years.
Yeah.
You get a big portfolio, and it'd be rather miraculous if they all reach their exit, by the 10th anniversary.
So some payout after the fund life is over. So,
Well, and the fund life gets extended, and you end up managing the remaining assets, and in the meantime, you've raised an additional fund where you're initiating new investments and then sort of managing the trailing assets of the prior funds.
okay.
We'd like to all wrap them up in kind of a 12 to 14 year time frame, but I can tell you there's funds out there that have lasted much longer than that.
Yeah.
And it's not only because it takes that long to get to exit. Sometimes you get to an exit and it's a structured acquisition
Oh,
with milestone payments, and
don't
then
get
sort
all
of
the
like,
money right
okay, we
away.
got an exit. Now we gotta wait to collect all
Yeah.
the exit proceeds if it achieves its success.
All right. Well, thanks. This was really helpful. I appreciate you sharing some time and thoughts on this.
Hey, anytime, Dan. Glad to be helpful. You're doing great things, and appreciate all the help you're providing on the entrepreneurial scene in Milwaukee.
Thanks.
All right.